Good afternoon, everyone, and welcome. Thank you for joining me. My name is Tom Essaye, and I'm editor of the Sevens Report, which is a daily morning macro report read by thousands of financial advisors and investors. Thank you for joining me today to discuss a pretty important topic for the markets, and that's Trumponomics. And specifically, we all know that we've seen a massive rally in stocks, the best rally we've seen in years, frankly. And a lot of that rally is predicated on the idea that Trumponomics is going to usher in a new era of growth for the economy and a new era of higher earnings for stocks. And we want to dive a bit into that and see exactly what's expected and give us some actual markers along the way that we can look for to tell us whether or not those expectations are being met. So as with all of these webinars, I like to set out a series of goals because I don't like wasting people's time, and I want everybody to have a takeaway from these events. So as mentioned, we know why the market's rallying. It's based on the hope and anticipation that we're going to get a much more positive pro-growth regime in Washington. Whether or not this rally, as impressive as it's been, becomes something longer, becomes a real bull market, which it is not yet. Depends on the specifics. At some point, what is expected has to come to fruition. Otherwise, the market is way over its skis, as we used to say on the floor of the stock exchange. So over the next few minutes, we're going to cover what's expected during the first 100 days of the administration, whether those policies are truly pro-growth, and what key policy we believe will potentially validate this rally in stocks. So we always like to give people sort of one or two things to look for. We're going to do that again today. So the first 100 days, what to expect. Now, details around what's expected from the administration are few and far between, frankly. But over the past week, I've done a lot of research trying to figure out what we can realistically expect, not what's just being said, but what we can realistically expect. And to do that, I've really focused in on the comments and articles covering VP-elect Pence, who I believe is the policy quarterback for this administration. I think he is really going to direct policy from a nuts and bolts standpoint as far as getting things done in Washington. Now, specifically, he gave an interview to the Wall Street Journal 2 Thursdays ago or 2 Fridays ago, where he outlined their priorities for the first 100 days. And here's what he said in order of importance. First, illegal immigration. Second, repealing and replacing Obamacare. Third, appointing a Supreme Court justice. And fourth, strengthening the military. Those are the 4 things that the administration is going to be focused on during the first 100 days, starting on January 20th. Then he said, from a second 100 days standpoint, sometime in the spring, the administration will focus on tax reform. So, the spring, we can reasonably assume that it's going to happen sometime between, April and July. That's basically, kind of Q2. So Q1, the four issues, the 4 priorities that we talked about in the previous slide, and then Q2, then we turn our gaze to tax reform. I think there are a couple important takeaways from this. From a business standpoint, from a growth standpoint, from a validating the rally standpoint, if Obamacare is repealed and replaced, that is generally positive for business. Increased defense spending to strengthen the military and regulatory reduction are also generally positive for business. But I think that there's something big missing from those first 4 priorities in the administration in the first 100 days. There are no wholesale pro-growth policies. So what concerns me is that people are under the impression that from the minute Trump gets into office, all of a sudden taxes are going to be slashed, money is going to be spent, and growth will explode. Well, based on their own admission, that's not exactly the schedule. They do want to get to those things, but those aren't priorities. Immigration, Obamacare, the Supreme Court justice, and again, defense are the first four priorities. And for me, one of the things I'm trying to wrestle with right now is how much political capital is going to be spent addressing those 4 issues. I mean, you take something like illegal immigration. Well, I think we've had 5 presidents who have tried to fix that issue, and none of them have been successful. and it's sort of put a bunch of them in a quagmire from a political capital standpoint, to be honest. So while I'm optimistic that things will get done, the point I'm trying to make here is that expectations are very, very high for the pro-growth policies and for changes to occur right away. And that may not be the reality. That said, one thing that I do think is possible and that I think could be significantly important if it is passed in a relatively timely manner, and by timely I mean in the first half of 2017, is corporate tax reform. Put simply, if you look around the street, there's a bunch of analysis on this, but most everybody focuses on one specific number. If the corporate tax rate drops to 20% or lower in the first half of 2017, then we can generally expect 2017 S&P 500 earnings per share to rise as much as 10%. That single occurrence would help alleviate major valuation concerns that I and a lot of people have over this market and help to fuel the rally even further. Almost immediately, we would go from a market that's trading at 18 times earnings, next year's earnings, which is frankly historically proven unsustainable, to a market that's trading at a much more reasonable 16 to 17 times with room for growth. That is the realistic positive game changer we are looking for in 2017. That's what I'm focused on as we start this new year, because if that comes through, then this market probably has some serious legs. And I'm not talking about, 3, 4, 5%. I'm talking about, real bull market type stuff. Bottom line, expectations are now extremely high for Trump and the Republicans, and there is a risk of disappointment. I mean, Washington is still Washington, regardless of one party in power or not. Valuations have become significantly stretched in anticipation of higher growth and bigger earnings. And if that does not materialize, then this market is potentially significantly overvalued and at risk of a nasty pullback. Additionally, bond yields in the US dollar have surged over the past month. In a vacuum, that would be equity negative, given our current environment, but that is being ignored because of the expectation of future growth. Again, if that does not occur, then the 10-year yield at 250 and the dollar well above par, they are problems for earnings, and it makes the overvaluation worse in the market. So the bottom line, growth needs to come through, and it can, but it needs to show itself relatively early. Right now, we're in a bit of a buying euphoria. It doesn't matter what's happening. Stocks are going to go up, but that's not going to last. At some point, there has to be some sort of validation of all this enthusiasm. Otherwise, the money flow into equities will stop. And again, with the valuations where they are, you could see an air pocket in stocks real quick. Bottom line, we are focused on corporate tax reform. If we can get that done early in 2017, then this market really could have legs. Thank you very much for joining us today. We hope this has provided some insight and some specifics as to what people are looking for and what needs to happen to have the fundamentals behind this rally come in and support it, and also pave the way for further gains in stocks. To get our latest macro research, including tactical investment ideas, and to start a completely free trial of our daily macro report, the Sevens report, just go to our website, www.sevensreport.com. The Sevens report is the only daily macroeconomic report that gives you everything you need to know about markets by 7 a.m. each morning in 7 minutes or less. We cover all assets, stocks, bonds, commodities, currencies, and economic data. We save you time, and we give you the talking points and intelligence you need to successfully navigate this market. Again, the 2-week trial is completely free. All you do is give us your email address. We add you to the rolls for 2 weeks. If you don't want to buy it, you just get taken off. Thank you very much for joining me today. And again, I hope this was insightful. Thank you.